Welcome back, everybody. We're diving deep today into the financials of Motisons Jewelers Ltd.
Ooh,
It's
exciting.
their second quarter for fiscal year 2025. So we've got a couple of things here. Their letter to the Bombay Stock Exchange and the National Stock Exchange of India
Right.
announcing the results. And then we've got the detailed, unaudited financial statements.
Yeah, right.
So we are going to unpack some data and see what it tells us about Motisons Jewelers' performance and their plans for the future.
Sounds good. I'm excited. You know what's interesting? Right off the bat,
Yeah.
Motisons is hinting at some pretty ambitious moves.
Okay.
They're getting ready to raise a substantial amount of capital.
Like, how much are we talking?
We're talking 170 crore rupees through convertible warrants.
Whoa. Hold on. 170 crore rupees through convertible warrants. That's a big move.
Yeah.
Before we get into all the little details of that, can you just give us a quick overview of their overall Q2 performance?
Yeah.
Did they even have a good quarter to justify raising that much money?
Yeah, absolutely. So starting with the big picture, Motisons Jewelers saw some impressive revenue growth this quarter.
Okay.
Their revenue from operations jumped to 10,934.44 lakhs in Q2, which is a significant increase from the 8,871.20 lakhs they reported in the first quarter of fiscal year 2025.
Right.
And it's not just revenue. Profitability is also looking good. Profit after tax landed at 1,039.55 lakhs, up from 633.20 lakhs in Q1.
So double-digit growth on their top and bottom line.
Exactly.
Color me impressed. All right, so you mentioned that they're planning to raise this massive amount of capital. Does that signal that they're aiming for even more growth? Like, could they be thinking about expanding or maybe acquiring other businesses?
Yeah, that's a great question. And it's definitely a possibility. Seems like they're positioning themselves for something big. But before we get ahead of ourselves, let's take a closer look at their existing business.
Okay.
I know you're probably curious about the breakdown of their revenue streams.
Yeah, I am.
So we know jewelry is their core business, of course.
Right.
Do we have any insight into which specific product lines are driving their success?
Yeah, that's exactly what I was thinking. Do they make more money from gold or diamonds or other materials? It'd be interesting to know if any particular product lines are like outshining the others.
Yeah, you're right. That would be a valuable insight, unfortunately. The materials we have don't give us that level of detail. We know they generate revenue from the sale of jewelry, including gold, diamonds, kundan, and other precious metals and stones. But we don't have a breakdown of how much each category contributes to the total.
Okay, so we can't see like the individual brushstrokes, just the overall masterpiece.
Right.
But even without those specifics, we can still get a sense of their efficiency and profitability by looking at their margins, right?
Absolutely.
So what can you tell us about their gross profit margin and their net profit margin? Are they managing to keep costs under control and convert revenue into actual profit?
Yeah, margins are a key indicator of a company's health.
For sure.
Now, the documents don't give us specific margin percentages,
Okay.
but we can calculate them using the data that is provided. So let's start with gross profit margin.
Okay.
So gross profit margin is a measure of how efficiently they produce their jewelry.
Okay.
How much profit do they make after accounting for the direct costs of making those sparkly goods,
Right.
like raw materials
Right.
and manufacturing.
So it tells us how much is left over from each rupee of revenue after they've paid for those essential ingredients and production processes.
Exactly.
The higher the gross profit margin, the better they are at managing those direct costs.
Exactly. So to calculate the gross profit margin, we take the gross profit, which is the profit, before we factor in expenses, like salaries and marketing and rent and all that.
Right.
We divide that by the total revenue.
Okay, so in Motison's case, we would take their gross profit figure from the financial statements and divide it by their total revenue from operations.
Exactly.
What about net profit margin? Is that the one that tells us how much profit they're making after all expenses are accounted for?
Yes. Net profit margin is kind of the gold standard for measuring overall profitability.
Okay.
It tells us how much of each rupee in revenue actually translates into profit once all expenses are factored in.
Gotcha.
Think of it like this. You can sell a ton of jewelry, but if your expenses are sky high, you might not be making much profit. At the end of the day, net profit margin gives us a clear picture of how much they're actually pocketing from each sale.
Okay, so that's gross profit margin and net profit margin, two key metrics to assess. Motisons Jewelers, efficiency and profitability.
Exactly.
Now, let's put their performance into perspective. How do their Q2 numbers compare to the same quarter last year? Are we seeing growth, or are they struggling to maintain their momentum?
Looking at their year-over-year performance, the numbers tell a pretty compelling story of growth in Q2 of fiscal year 2024. Their revenue was 9,014.45 lakhs, and their profit after tax was 518.28 lakhs. They were seeing a significant increase in both revenue and profit compared to the same period last year.
This is a pretty impressive jump, clearly. They're doing something right. What factors might be driving this success? Is it the overall market for luxury goods, or is it their specific business strategies, or maybe a combination of both?
That's a great question, and it's one we'll need to explore further. It's possible that broader economic factors are playing in their favor. Maybe the demand for luxury goods, like jewelry, is on the rise, or perhaps they successfully tap into some new markets. We know they're expanding their retail footprint. So that could be contributing to their growth as well.
And speaking of expansion, let's not forget about that massive capital raise we talked about earlier. It seems like Motisons Jewelers is loading up on fuel for some serious growth. Could this be their way of signaling to investors that they're ready to take their business to the next level?
It's certainly a possibility. A capital raise of that magnitude suggests they have big plans in motion. It could be anything from expanding their existing operations to acquiring new businesses, launching new product lines, or even investing in marketing and branding to boost their visibility.
Okay, so we've got this intriguing mix of strong financial performance and ambitious growth plans. Let's zoom in on their financials a bit more. We know they're spending money on materials, inventory, employee benefits, the usual costs of running a jewelry business. What can you tell us about their cost management and operational efficiency? Are they keeping a tight rein on their expenses, or are there any potential
areas of concern?
Okay, so to get a clearer picture of their cost management, we need to take a closer look at their cash flow statement.
Okay.
It reveals how money is flowing in and out of the company. It gives us a glimpse into their financial health. One interesting point that jumps out is the change in their cash and cash equivalents from the previous quarter.
Right.
It's decreased significantly, and that's something we need to investigate further. Okay, so their cash on hand has shrunk considerably. Is that a cause for concern? Could it be a sign that they're overspending or struggling to manage their cash flow effectively?
Not necessarily. Remember, cash flow can fluctuate from period to period. A decrease in cash on hand could be due to various factors. It's important to look at the reasons behind the change.
So what are some potential reasons for this decrease? What could be driving that shift in your cash position?
It could be related to their inventory purchases.
Okay.
If they've been stocking up on raw materials or finished goods, that would naturally tie up a significant amount of cash. They could also be investing in new stores or equipment, or perhaps they've used some of their cash to repay debt. Without more detailed commentary from Motisons, it's difficult to say for sure what's driving this change.
And speaking of more detail, I've noticed that the materials we have don't provide much insight into their specific cost management strategies. We know what they're spending, but we don't have the inside scoop on how they're working to optimize those costs. Are they implementing
new initiatives to streamline their operations or negotiate better prices with suppliers?
Yeah, you've hit on an important point. That kind of granular information would be incredibly helpful in understanding their overall financial strategy, for instance. Are they implementing any cost-cutting measures, or are they more focused on investing for growth, even if it means temporarily higher expenses? We simply don't have enough information to draw any definitive conclusions.
It's like we're missing a few pieces of the puzzle. All right, so we've covered the big picture: revenue streams, margins, year-over-year trends, and we even dipped our toes into their expenses and cash flow. But we still haven't circled back to that massive elephant, or should I say diamond, in the room, the 170 crore rupee convertible warrants issue.
Right. Let's unpack this intriguing development. Can you walk us through the specifics of this issuance and who's involved?
Of course. So, Motisons Jewelers is issuing 1 crore warrants at a price of 5. 170 per warrant. Now, here's where it gets interesting. Only 25% of that price, which comes out to
$42.5 per warrant, is payable up front.
Ah, so it's like an installment plan for investors.
Right.
Spreading out the cost over time. But who are these investors who are willing to shell out such a significant amount of capital to back Motisons Jewelers? Are we talking about big institutional players or individual investors?
In this case, it's institutional investors. Yeah. These warrants are being issued to 3 specific non-promoter entities: North Star Opportunities Fund, Eminence Global Fund, and NextBack Limited. These are established investment firms with a history of backing promising businesses.
So it seems like Motisons Jewelers has managed to attract some serious financial firepower. What's the significance of this capital infusion? What could it mean for their future growth and expansion plans?
Well, with that much money coming in, the possibilities are pretty vast.
Yeah.
They could significantly expand their retail footprint, maybe opening new showrooms in prime locations, or even venturing into international markets.
Ooh, I can already picture those glamorous new storefronts.
Right.
And with their strong financial performance and ambitious growth plans, they're certainly a company to watch.
Absolutely.
What else could they do?
Well, they could also invest heavily in marketing and branding, amplifying their visibility, reaching a wider audience. Perhaps a high-profile celebrity endorsement is in the works.
Now, that would make a statement.
Right.
And let's not forget about potential acquisitions. They could use this capital to acquire smaller competitors or even expand into complementary businesses.
Within the luxury goods sector.
You're thinking strategically. It's like they're building a war chest to fuel their growth ambitions. This capital raise could truly be a game changer, positioning them for even more aggressive expansion. Okay, so we've got this massive influx of capital from the convertible warrants. But remember, this isn't their first big financial move. Didn't they also have a pretty successful IPO back in December 2023?
Yes, they did.
I'm curious about how they allocated those IPO proceeds and what it reveals about their priorities and financial strategy.
Right. The allocation of IPO proceeds can be a revealing look into a company's playbook.
Yeah.
So in Motisons Jewelers' case, they used a large portion of the IPO funds to repay existing borrowings, totaling 5,572.27 lakhs.
So rather than immediately pouring all those funds into expansion or flashy new ventures, they prioritized strengthening their financial foundation.
They're reducing their debt? That seems like a responsible move.
It does, isn't it? It suggests they were focused on improving their balance sheet and creating a more stable financial footing before pursuing aggressive growth. They also allocated a substantial amount, 7,100 lakhs, to working capital requirements.
Ah, the fuel for the engine.
Working capital is essential for day-to-day operations, purchasing inventory, paying salaries, covering those essential costs that keep the business humming.
Exactly. And then we have a smaller allocation, 380.69 lakhs for general corporate purposes.
Okay.
This covers various administrative expenses, legal fees, consulting costs, those essential but often overlooked aspects of running a business.
So they've got debt repayment, working capital, and general corporate purposes covered, it seems like. They've strategically allocated their IPO funds to build a solid foundation for growth.
But remember, we spotted something interesting earlier. A small portion of those IPO proceeds remained unutilized.
Yes.
What's the story there?
As of now, they still have 145.93 lakhs from the IPO that hasn't been allocated or spent.
Interesting. It's like they have a little nest egg tucked away for a rainy day or a special opportunity. What are some possible explanations for this unutilized portion? Are they holding on to it strategically, or is it simply a matter of timing?
Well, we don't have specific details from the company.
Well, but it's possible they're keeping this cash in reserve for strategic acquisitions.
Or investments.
That might arise in the future.
So they've got a little financial cushion, which adds to their flexibility.
And gives them more options as they navigate the ever-evolving world of luxury retail. Okay, so we've covered the big picture of the financials, delved into their IPO proceeds allocation, and touched upon those intriguing convertible warrants, but we still haven't explored one crucial element of their financial picture, their balance sheet picturing glittering vaults filled with diamonds and gold.
Oh, shiny.
Yes. So the balance sheet is essentially a snapshot of their financial position. At a specific point in time, it shows us what they own, what they owe, and the difference between the two, which represents their equity or ownership state.
in the company.
Right.
Okay, so it's like taking inventory of their financial situation, seeing what they have in the plus column, in the minus column. Exactly. And by analyzing their balance sheet, we can gain insights into their financial stability, their liquidity, and their overall leverage. We'll get into all the juicy details in the next part of our deep dive.
Sounds like we've got some more detective work to do. I'm ready to crack open the balance sheet and see what hidden treasures we can unearth. Stay tuned for part 2 of our Motisons Jewelers Deep Dive, where we'll explore their assets, liabilities, and equity, and uncover even more insights into their financial health and growth potential.
All right, we are back and ready to unlock the secrets of Motisons Jewelers' balance sheet.
Yes.
It's time to see what they own and what they owe,
Yeah.
and what it all means for their financial stability and their growth prospects.
Remember, the balance sheet is like a financial snapshot.
Okay.
Taken on September 30th, 2024. It gives us a glimpse into their assets, their liabilities, and their equity at that specific moment in time.
Okay, so let's start with their assets, the valuable things that Motisons Jewelers owns. I'm imagining those glittering vaults filled with diamonds and gold we talked about earlier.
Yeah.
You're not far off.
Okay.
Their inventory, which includes all those precious metals and stones, is indeed one of their most significant assets. Looking at the balance sheet, we see a whopping 43,895.06 lakhs tied up in inventory.
Wow, that's a serious amount of sparkle.
It is.
But it makes sense, though. They need a substantial inventory to create all their diverse jewelry collections and meet customer demand. What other assets are listed on their balance sheet?
Well, they've got the essentials for any retail business, property, plant, and equipment, which totals 492.25 lakhs.
Okay.
This includes their showrooms, their manufacturing facilities, and all the specialized equipment they use to design and craft their pieces.
Ah, the brick and mortar of their operation. I bet those showrooms are stunning, all decked out to showcase those dazzling jewels.
I'm sure they are.
Now, they also have a right-of-use asset, which reflects the value of their leased properties. This comes in at 135.92 lakhs. And like many companies, they have intangible assets, which can include things like brand value, trademarks, and other intellectual property. For Motisons, this category is relatively small at 41.53 lakhs.
Right.
Okay, so they've got a mix of tangible and intangible assets, but the bulk of their value is concentrated in that impressive inventory. Now let's flip the coin and talk about their liabilities. What do they owe to others? Are they carrying a lot of debt, or are they managing their financial obligations responsibly?
So their biggest liability is short-term borrowings, which comes to 8,735.61 lakhs.
Okay.
These are loans that need to be repaid within a year, and they could represent borrowings used to finance inventory purchases, manage working capital needs, or cover other short-term expenses.
It makes sense that they'd use some short-term debt to kind of keep the wheels turning in a business like this.
Yeah.
It's all about managing that cash flow effectively and making sure they have the resources to operate smoothly. What other liabilities are listed on their balance sheet?
Trade payables is another significant liability.
Okay.
This represents the money they owe to their suppliers for raw materials, finished goods, and other services. It totals 2,316.97 lakhs.
So they're using credit to purchase materials and keep their inventory stocked, just like they offer credit to their customers.
Right.
It's a common practice in business, and it's all about managing those relationships effectively. Are there any other notable liabilities we should be aware of?
We also see lease liabilities, reflecting their obligations for leased properties, current tax liabilities, and various other short-term obligations. Together, these items contribute to their total liabilities.
Okay, so they've got a mix of short-term and long-term liabilities, which is pretty typical for a growing business. But what about their equity?
Right.
That's the real measure of their financial stability, right? It tells us how much of the company is actually owned by the shareholders after all the debts are paid off.
You're exactly right. Equity represents the ownership stake in the company. It's the value that belongs to the shareholders once all their liabilities are settled. For Motisons Jewelers, their total equity stands at a healthy 34,467.35 lakhs.
Wow, that's a sizable chunk of equity. It seems like they've built a solid financial foundation. And remember, this equity figure is after they've already used a portion of their IPO proceeds to pay down some of their debt.
Yes, that debt reduction move definitely strengthened their balance sheet and improved their equity position. It suggests they're prioritizing financial stability alongside their growth ambitions.
So let's take a step back and look at the big picture. We've examined their assets, primarily that impressive inventory, and their liabilities, which include a mix of short-term borrowings, trade payables, and other obligations. And we've seen that they have a healthy amount of equity reflecting the value that belongs to the shareholders. What's the overall takeaway from Motisons Jewelers' balance sheet? Are they in a good position financially?
from what we can see, their balance sheet paints a picture of financial health. They have substantial assets, they're managing their liabilities responsibly, and their equity position is strong.
So they've got the financial resources to support their growth plans and kind of navigate the challenges of a competitive market.
Exactly.
Now remember, when we were analyzing their cash flow statement, we noticed that their cash and cash equivalents had decreased significantly from the previous quarter.
Right.
Well, the balance sheet can actually shed some light on this.
Uh-huh.
If we look closely, we can see that their inventory has increased compared to the previous period.
That's right.
So that makes sense. If they've been investing heavily in inventory, it would explain why their cash on hand has decreased. They're essentially converting cash into valuable assets, those precious metals and stones that form the heart of their business.
Precisely.
Yeah.
It's like they're stocking up on the raw materials they need to fuel their growth. And that aligns with what we've seen in their revenue and profit figures. They're clearly selling a lot of jewelry, so it makes sense that they'd need to replenish their inventory to keep up with demand.
It's all connected. The balance sheet is like a puzzle piece that fits perfectly with the other financial statements, helping us understand the bigger picture of Motisons Jewelers' financial health and strategy.
Now, while we've gained some valuable insights from their balance sheet, it's essential to remember that it's just one piece of the puzzle.
Okay.
We still need to consider the context of their industry, their competitive landscape, and, of course, their overall business strategy.
Right. It's all about connecting the dots and seeing how these financial pieces fit into their larger narrative. We've seen their strong financial performance, their ambitious plans for expansion, and now their healthy balance sheet. It seems like they're firing on all cylinders.
It does.
But as with any deep dive, we're always left with more questions to explore. We're still missing those crucial insights from management, their perspective on the numbers, their vision for the future, and their plans to navigate the challenges and opportunities that lie ahead.
You're right. That management commentary would provide a much richer understanding of their strategy and their expectations for the future. It would be fascinating to hear their thoughts on the evolving luxury retail landscape, their competitive positioning, and their plans to leverage their strengths and address any potential weaknesses.
I'm with you. It's like we've got the outline of the story, but we're missing some of the key chapters. Still, this deep dive has given us a solid foundation of knowledge about Motisons Jewelers Ltd.
Absolutely. We've uncovered some valuable insights into their financial performance, their strategic priorities, and their potential for growth.
And remember, dear listeners, this is just the beginning of your own exploration.
Yes.
Don't stop here. Dig deeper into their investor relations materials. Check out industry reports and follow their news and announcements to stay up to date on their journey.
The world of finance is constantly evolving, and there's always more to learn and discover.
Yes. And speaking of more to discover, we have one final piece of their financial puzzle to explore their cash flow statement. It's time to follow the money trail and see how they're managing the lifeblood of their business. Stay tuned for the final part of our Motisons Jewelers deep dive. All right, we are back for the final piece of our Motisons Jewelers deep dive. We've gone through the financials, we've seen the IPO, we peeked at the balance sheet, and now it's time to follow the money trail through their business, using their cash flow statement.
I like that. Follow the money trail.
Yeah.
Think of this statement as kind of a map that tracks the movement of cash, both in and out, of the company.
Yeah.
It gives us a dynamic view of their financial operations over a specific period.
Okay, so it's like watching their financial circulatory system in action. We can see where the money's coming from, where it's going, and how efficiently they're managing this essential resource.
Precisely. Now, remember earlier when we were discussing their decrease in cash equivalents.
Yes.
Well, the cash flow statement provides a detailed breakdown of why that happened.
Right. We were speculating that it could be because of their inventory investments. But now we can actually see the numbers and confirm our suspicions.
Exactly. So the cash flow statement is broken down into three main sections.
Okay.
Cash flow from operating activities.
Okay.
Cash flow from investing activities.
Okay.
And cash flow from financing activities. Let's start with operating activities.
Okay.
Which is essentially the cash generated from their core business operations.
Okay.
Selling jewelry.
So that sounds like the heart of their cash flow. So are they generating enough cash from their operations to cover their expenses and fuel their growth?
That is the million-rupee question. The answer is a bit nuanced.
Okay.
So, looking at the statement, for the half year ended, September 30th, 2024,
okay,
we can see that They actually used more cash in their operating activities than they generated.
Okay.
In other words, they had negative cash flow from operations.
So they're spending more cash on like your day-to-day operations than they're bringing in through sales.
Right.
Does that sound a little concerning? Is that a red flag?
It's not necessarily a sign of trouble.
Okay.
But it's definitely something that needs to be examined closely.
Okay.
A negative cash flow from operations can be caused by various factors.
Yeah.
And it's important to understand the underlying reasons.
So let's play detective and investigate what factors could be contributing to this negative cash flow from operations.
One of the primary culprits, as we suspected, is the change in their inventory.
Okay.
As statement shows, a significant decrease in inventories compared to the previous period.
Okay.
This means they've sold a considerable amount of jewelry, which is good news for their revenue. But it also means they likely had to purchase new inventory to replenish their stock.
So while those robust sales are generating cash,
Right.
they're simultaneously spending cash to restock their shelves and keep up with demand. It's a classic balancing act. Is there anything else that could be impacting their operating cash flow?
Another factor we need to consider is their trade receivables, which is the money owed to them by customers who have purchased jewelry on credit. Looking at the statement, we see a decrease in trade receivables compared to the previous period.
Okay, so they've successfully collected more payments from customers
who bought on credit. That would bring in cash and have a positive impact on their operating cash flow.
Precisely. So we've got this interplay between inventory and trade receivables influencing their operating cash flow. The decrease in inventory is using up cash, while the decrease in trade receivables is bringing in cash. It's a very dynamic process.
Yeah, it's like a financial dance with cash flowing in and out as they manage their sales, their inventory, and their customer payments. But even with those positive collections from trade receivables, they still ended up with a negative cash flow from operations. Are there any other elements we need to consider? There are a few other line items on the cash flow statement that could be contributing to the negative figure, such as changes in other current assets and liabilities, as well as income taxes paid. However, for a retail business, like Motisons Jewelers, changes in inventory and trade receivables tend to be the biggest drivers of operating cash flow.
So while this negative cash flow from operations might raise an eyebrow, it's not necessarily a cause for panic. It's more about understanding the context and the underlying dynamics of their business.
Here's the say. It's important to remember that cash flow can fluctuate from period to period. A single snapshot in time doesn't tell the whole story. We need to look at trends over time and consider their overall financial health.
Okay, that makes sense. So we've got this detailed breakdown of their cash flow from operating activities. What about the other two sections of the statement? What can we learn from their cash flow from?
Investing activities and financing activities. Okay, so cash flow from investing activities primarily reflects their investments in long-term assets, like property, plant, and equipment. In Motisons' case, we don't see any major outflows in this section, which suggests they're not making any significant capital expenditures.
They're focusing on and managing their existing assets rather than making big investments in new facilities or equipment. That aligns with their strategy of using IPO proceeds to pay down debt and strengthen their financial foundation.
Precisely. Now, cash flow from financing activities deals with activities related to raising and repaying capital. This section would typically show cash inflows from issuing debt or equity, as well as cash outflows for debt repayment, dividend payments, and share repurchases.
So this is where we'd see the impact of their IPO and their upcoming convertible warrants issues. And we can see the cash inflow from their IPO back in December 2023. And as those convertible warrants are exercised, we'll see a significant influx of cash in this section. So their financing activities are poised to inject a substantial amount of cash into their business, which they can then use to fuel their growth plans. It's like they're strategically managing their financial levers to support their ambitions.
But remember, we've been exploring these financial statements in isolation. But it's crucial to connect them to the broader narrative of Motisons Jewelers business.
Right. It's all about understanding how these financial pieces fit together and how they reflect the company's overall strategy and performance.
Exactly. And that's where the lack of detailed management commentary leaves us
with a little bit of a cliffhanger.
We've gleaned valuable insights from their financials.
Yeah.
But we're missing their perspective on the numbers, their interpretation of the trends, and their vision for the future.
It's like we've assembled the puzzle, but we're missing the box cover. That shows us the complete picture. Well, that's business. So, dear listeners, if you are as captivated by Motisons Jewelers Ltd. as we are, consider this your call to action. Delve into their investor relations materials, explore industry reports, and stay tuned for their next financial update. There's always more to discover and analyze.
The world of finance is constantly evolving. Stay curious, keep learning, and join us again for another fascinating deep dive into the world of business and investing.
Until next time.